Hi, it is June 21st, 2024, and I thought maybe I'll just do a video about the Japanese yen because there doesn't seem to be any coverage in the mainstream media and barely any coverage in the alternative media about this disaster. But I'm looking at an article here from Reuters. This is March 27th of this year. Japanese yen hits 34-year low. And this was when the price was just about 152 yen to the dollar. They're talking about how there had been a 7% decline up to that point in the year. Now, a 7% decline in a currency, if you think about inflation, that's a huge inflation number if you were dealing with that annually. But they dealt with that in just the first 3 months of the year. Well, almost 4 months. This is March 27th. So 7% decline. Well, now it was 152 then. Looking at the current rate, 159.45. So it has lost another, according to my calculations, another 4.7% since then. So this is in less than 3 months. So for the year, it's down, 12%? And we're only halfway through the year. Meanwhile, Japanese 10-year bond, what yield can you get to compensate you for all that inflation? Because, if you own a bond, what you own is a promise of future payments of that currency. So a 10-year bond, you're not getting paid back that principal for 10 years. So what rate are you getting? Less than 1%. So if you want to tell me that these markets are rational, that's what I'm going to show you. The only reason anyone owns Japanese bonds is a misguided sense of patriotism that the Japanese people have. The idea that they need to prop up their government, support their currency, support their government bond market. But any rational person looking at this has to think, why am I only getting paid 1% for a currency that's lost, for payments in a currency that's lost 12%, and we're not even halfway through the year? So, and that 12%, that's when measured against the US dollar, which itself, inflation in the US is like 3%, according to the official government numbers. So you're really losing even more than that. Now, if you were to price it in gold, well, the dollar's lost, I don't know how much is gold up for the year. Gold price 12/31/23 was 2063 we'll call it. Now it's 23.29. So doot 266 difference divided by the original price. So gold is up 13% in terms of the US dollar. So you can choose to believe that 3% inflation number that the government tells you, just like you can choose to believe that the economy is strong like the government tells you, that employment's not an issue, that everyone's just doing great. Or you can just open your eyes and you can look at the prices that you're having to pay at the supermarket Or you could just look at the price of gold and see that in terms of gold, the dollar's down 13% halfway through the year. And the Japanese yen is down 20, whatever we said in terms of dollars, and you're getting 1% on the Japanese bonds. So if you don't think there's going to be a debt crisis, if you just think that people are just going to continue, I mean, I don't know what to tell you, man. It's a really screwed up economy. This is the end game of Keynesian economics. Here we are. Have a good day.